Hi, it's John Mousseau. I'm the President and CEO of Cumberland Advisors and Director of Fixed Income. It is almost 5 o'clock on Friday, April 24th, and in the bond markets this week, we had a period of normalcy. That was nice. Treasury yields probably down about 5 basis points in the long end to where you have a 10-year bond at 0.6 and a 30-year bond at about a 115. Tax-free bonds also down a little bit. Long tax-free bond is 275 to 285. 10-year bond is probably somewhere in the 1 and change level. Very cheap compared to treasuries. But I think the real key for this week is that deals came to market, got done easily. Most municipal bond deals oversubscribed. That's a good sign. We had stability in the markets. My colleague Matt will talk about the equity markets. But the real issue for this week is when you heard Senate Majority Leader Mitch McConnell talk about states being allowed to declare bankruptcy as opposed to getting federal aid. There was a big fight back against that. We were one of the people. We published on it. We said we thought it was reckless and didn't think it was informed well. And here's why. Because most states do not have the legal authority to declare bankruptcy. So that's number one. You'd have to change the law for them to do so. The second part is that even if you had the law changed, the states would have to prove insolvency to be able to qualify for a bankruptcy. So think about being able to prove insolvency. It means, have you done everything that you can to pay your debts? That would include reducing workforce. That would include selling state assets, selling office buildings, selling toll roads that the state owns, things of that nature. So by very definition, the states today couldn't even make those kind of claims. We think this was political posturing. We saw another small business package passed this week. We think the House has certainly talked about with Nancy Pelosi bringing a package that is going to include help for state and local governments on top of what's already been done. We haven't seen any real disruptions in the municipal market this week. And I think very important, you started to see a resumption last week and this week of inflows into municipal bond funds. We think that's a very healthy sign. And if you looked back into March and the real sell-off that happened in March, we know that the culprit there was the selling of municipal bond funds, not for reasons of credit, but totally for reasons of liquidity. And so now that you're seeing inflows, that's another good sign that the markets have repaired themselves. So as you sit here today, you see treasuries a little lower, municipal bonds a little lower, very, very cheap on a relative basis, pretty much where they were at the end of December on a nominal basis. So in our eyes, still very good value. Thanks a lot. Hope you have a great weekend. We'll talk to you next week.
Thanks, John. Matt McAleer, Director of Equity Strategies at Cumberland Advisors. Another volatile week. Interesting week from a couple of standpoints I want to point out. What we try to do here, and you know from watching the videos over the last year and a half or so, try to point out what we like in the market, what we don't like in the market, what is positive, what is negative. So in terms of that path today, what did I like in the market this week? I like the fact that with the oil headlines midweek, which were really some blaring, scary type headlines, the market was able to get that priced in. Oil equities actually were the best performer of the week. If you had said last Thursday or Friday that oil on the front month was going to trade to a negative number, and on the next, the June month, the next month was going to drop, at 1.25%, you would imagine the Exxons, the Conocos, the Chevrons would be down in unison. Nice to see them rally, perhaps getting some of that headache priced in. Along that same way of thinking, along that same plane, very, very interesting what's going on in the transportation index. Too often, and we spoke about this morning on our call, too often we take a broad look at sectors and don't dig into industries. And you look at transports really, weighed down and having trouble rallying as a broad sector, primarily because of that airline weight. But underneath the hood, you see great action out of the truckers and decent action out of the railroads. But it's the truckers that really caught my attention. You have a handful of truckers trading within, 5% of all-time highs, back to where they were trading in January and February. That truckers are really a domestic peek into the economy and what we expect from the economy. So that was a positive. We liked seeing that. Other area, and it shouldn't come as a surprise, but I'm pleased that we're long this in both the US ETF and in the tactical trend strategy in decent size, 10% position. Biotech, just ripping. Obviously with the headlines and with COVID-19, that's not a surprise to us, but it's nice to see the strength across the entire spectrum of biotech. And the fight back in healthcare against the election year weakness that was expected is impressive. Healthcare has been dynamite. Medical devices, biotech, very strong. The third thing that I would take as a positive this week was the dampening in the VIX. Got the VIX back down under 40. Keep in mind on Tuesday and Wednesday with the oil headlines and the market selling off 4 or 5% intraday, VIX spiked back up to 46, 47. Remember what VIX is trying to tell us as traders, as investors. The VIX is trying to give us an indication of what to expect daily in volatility. How much volatility are we expecting intraday? Is it 1%? Is it 2%? Is it 3%? At a VIX of 70 or 80 back a month or 5 weeks ago, you're expecting, 4 or 5% intraday swings. Having it dampen from Tuesday, Wednesday at 46, 47 down to, I didn't even check at the end of the day, let's call it 36 on the VIX. Still elevated versus earlier this year, but certainly a little bit of calmness being priced in to the volatility of the market. VIX is often a much confused indicator and security, and it's important to understand what it's trying to tell us.